right. Good morning, good afternoon, good evening, wherever you may be. I hope all is well with you. If this is your first time here, I am Blair Armstrong of Team Armstrong Co-op Banker, located in beautiful Palm Desert, California, regardless if it's 118 degrees outside today. If you don't know me, again, I'm a global luxury specialist realtor here in the Coachella Valley. And then on my right, possibly your left, can't remember which way I got Sean set up today, is Sean LaRue of Sean LaRue Home Loans. And he is located in Scottsdale, Arizona today, but he's also licensed in 48 different states. So if you're ever looking for a loan, um, lo and behold, he can be in that state. For most likely, he can be in the state. There's only a couple states that he's not in. So, what's up, brother? How are you?
What's happening, homie? I'm doing great.
Yeah,
Moving, shaking, and loan making, baby. We're back.
moving, shaking, loan making. I usually say like cashing checks and breaking necks. That's whatever. Just
Love
doing this
that.
stuff. So, what's going on, man? So much movement in this housing market. I'm kind of getting this vibe right now. Again, as I'm obviously the residential side in here. Uh, there's this weird kind of underlying vibe. It's like, I don't know if I should buy, I don't know if I should sell. And again, if those of you who haven't been with us for the last couple of weeks, we've covered FHA loan, conventional loans, bridge loans, bank statement loans. Did I use that right? I keep
Bank statement. Yeah,
bank
yeah.
statement, not income statement, bank
Not
statement.
income statement. They're bank statements.
So bank statement loans. So we've covered those. If you guys missed this, go back to Team Armstrong. All of those episodes are there. Also, you can go to Sean LaRue Home Loans on his YouTube page. They're also there too. So, and then once we put the links up to where these guys are, you can find us there. So, my big question, which we're running into right now, especially in the market that I'm in, kind of usually in that $1 million market and above, and we do sell stuff below that. We basically sell all over the board. But one question that we're kind of trying to figure out right now is, okay, I've got the conventional loan and I got a jumbo loan.
Right.
And what is the best for me? Now, as we've also stated in the past couple episodes, it's like not every loan will fit somebody else different. Just like
Right.
we're all different, every loan is different for everybody else. So what type of advice can you first of all give me on a conventional loan, and then how does it compare to a jumbo loan? Which one is better?
Right. So let me just start off by saying today is Wednesday, July 31, 2024, because every year our conforming loan amounts are updated and changed.
Okay.
Like 8 years ago, they were maxed out at 417,000. Today, we can do a loan amount up to 766,550. Yes, that's the correct number. Last year it was a little bit less. That's what it is today, 766,550. So basically, if you buy an $800,000 house, put 5% down, you can get a conventional 30-year fixed. It's going to be underwritten full doc, which means 2 years tax returns, W-2s, 1099s, all your business bank statements, all the stuff. And that's what we're going to be focusing on today for these jumbo loans.
Okay.
We're not talking about creative bank statement programs. That's a different video. We're
Okay.
talking about full doc. You pay your taxes, you report your income, easy peasy. But what I wanted to dive into are some of the differences of how, if you're buying a house for 1.4 million, the different down payment options and how you split it up for jumbo loans, which is anything over the 766 550 number,
Okay.
and under that number. Okay, so easiest way to explain it is you have a conventional loan, $800,000 purchase. You can put 5% down and you can get mortgage insurance and you get a 766 loan amount, easy, full doc, conventional financing. No
Okay.
second mortgage because you're going to have the mortgage insurance.
Okay.
Okay, easy peasy. The jumbo loan is going to be anything over the 766 550 number, and typically let's say you're buying a $1.4 million house. If you're going to do that, you're going to put 20% down,
Okay.
and you're going to have a total loan amount of $1,120,000.
Okay.
Okay. Now, this question comes up a lot because there's a lot of high-end real estate. I know Ironwood. What are the values in Ironwood right now?
Probably real close to 800,000 right now as an average.
Okay. So 800,000, you could do the 5% down conforming loan, and this is for primary residences. Let me qualify that.
That's
So
good.
this is if you're going to be moving into the property as a
Mm-hmm.
primary residence. We'll just focus on that.
Okay.
Okay. Let's say you want to buy a $1.4 million house, but you only want to put down 10%. How would you do that? Well, basically what we would do is we do the 1.4 million purchase. We'd get your first loan amount at the 766, 550, and then you'd have a second mortgage of about $493,000.
Okay.
Let's just round down, make it easy. Now, you're not going to pay mortgage insurance because you have the second mortgage. The conventional loan allows you to put down the 10%, and we're working with a second lender to get you the second mortgage with the 10% down.
Okay.
Okay. And I've got some notes. I don't know if you want me to share this screen.
Yeah, let's do that because I think sometimes some of us out here are a little bit visual. Maybe
I know I am a little bit.
I am.
So these are the notes I put together for this. So this was the first scenario, the 1.4 million, 20% down. Total down payment for a jumbo loan would be 280,000, and the 1.12 total loan amount.
Okay.
Groovy?
Yep.
This is the conventional loan we just discussed. Sale price 1.4, 10% down. Your total payment with 10% down would be 140,000. Total financing is the 1.26.
Okay.
You get your first loan amount at 766, 550, and the second mortgage would be for 493, 450. Okay.
Okay.
Now, what's fun about this is that there are certain requirements for total loan amounts for the second mortgages. We're balancing FICO scores, debt to income ratios, and a bunch of other things. So let's say you only want to put down 5%. So on 1.3, because we get capped out with the $500,000 second mortgage,
Okay.
we're going to be limited with 5% down or $65,000 down to a $1.3 million purchase price, 65,000 down. Total loan amount is going to be 1.235. We get our first mortgage for 766, 550, and our second mortgage is going to be about 468. Okay. Now we're balancing the maximum loan to value for conforming loans. We're balancing the 5% down. We're balancing a 640 minimum FICO score, as well as a maximum allowable second mortgage of 500,000.
Okay.
Okay. So when you're talking to a lender and you're like, well, I want to buy the most I can buy. I want to put as little money down as possible. These are all of the kind of factors that go into making a decision, as well as looking at different rates, what's best for you. And in these higher price points, it can get a lot more complicated if you're not putting 20% down. That's the bottom line today.
So it's really going to come down to comfortable, whatever.
How comfortable?
Comfortable, uncomfortable, whatever that it is how much you want to put down and how much you really want to buy. So there's just, if I want to put 5% down, I'm going to do this. If I want to put 20% down, this one's better for you.
Yeah.
So how And I just want to make sure that we're clear on this. How big of a difference is a jumbo convent? What's what are the two main factors that is difference between a jumbo and a conventional?
Typically in the jumbo world, you're going to be required to do a full 2-year full doc review,
Okay.
underwrite. Typically in jumbo, they want you to have higher FICO scores, 700 or better to get
Okay.
the best rates. Some lenders will let you go down to a 680. It all depends on who you go with, but I'm a mortgage bank. We work with a bunch of different portfolio lenders. We work with a bunch of different banks in-house. And that's why, sometimes it's great and you can go to your B of A private client services or your Chases, but for the majority of people, we're balancing all these kinds of things with the loan application, and it really depends on you maximizing all of your opportunities with just one loan option. And we're figuring all of this out for you so that you don't
Okay.
have to apply to 5 different banks, furnish all the paperwork, get turned down, and all that. So working with a mortgage banker, somebody who does this in-house, but also brokers, is kind of our competitive advantage
Okay.
along with our service and our pricing. And so that's kind of the value that I bring from Neo
Right.
Home Loans and everything that we're doing to make it a fantastic experience for you guys.
Are you seeing more of the jumbo than the conventional right now, or is it about a 50-50? Or is there more? Is one weighing heavier than the other?
Um, I mean, it's a weird market out there, so it's hard to say anything right now is
Right.
consistent. It really depends on the client and the referrals, but I mean, I would say in the high end, I'm seeing a lot more of those bridge scenarios and doing private money because they have another property they want to sell and
Okay.
they're trying to figure out how to bridge it. Um, they're trying to do it without having a taxable event by liquidating stocks, bonds, or
Mhm.
retirement. And they've got the equity, it's tied up. So I would say that if we can go on a contingent offer, we're balancing some more of those conventional loan programs because in this price range we have a lot more money available. But like let's say we're a doctor. We want to buy a $1.5 million house, but we don't want to put a bunch of money down. How do we make that work? Now, if you're a doctor, I have a different doctor program. There's a whole nother thing for that. Maybe that's next week, leading into next week. But um, for just about anybody else, looking in this price range, maybe you're self-employed or moving up, these are all the considerations to think about, like how much is it going to cost me to get into this price range for 1.4 to 1.6, and can I get in for 10 or 15% down without having to break up with all my cash.
Yeah. And I think that's a big thing too. Is I want to remember too between the jumbo and the conventional. Right, this what you're really talking about too is for a primary residence. It's not for an investment purpose or a second, third, or fourth home,
Yeah,
which we see a lot out here in the desert. Right, this is specifically if you are coming out wherever on the 48 states that you work in. This is I'm going to live in this full time. And that's
right.
the way that's going to be. And then if you're going to do an investment property or a vacation home or something like that, is a whole different beast on there.
Absolutely. For second homes in this kind of a price range, we're looking at 20% down. For investment properties, ones where you want to Airbnb or rent them out long term,
Yeah.
you're looking at probably 25%, 20 to 25% down.
So again, recapping that again, it's a lower down payment on the loan through the jumbo. Is that correct?
Lower down payment on the
Or
conventional.
conventional, excuse me.
Yeah,
And then and we could go down as low as 5%. So I
yeah,
can keep money working for itself, but then I also have a first and second mortgage on that as well. Correct?
yeah. You can split it up by getting the conventional first mortgage and then a second mortgage to kind of break it up. Yep.
Okay. But it eliminates my PMI.
The second mortgage is instead of the PMI.
Okay.
Yeah.
Do you Let me ask you this, and that's a great question. Do you is there something better? I'm going to go back to we're weighing options right now. Would you rather have do you educate your customers whether to have a PMI or a second mortgage?
So that kind of depends on the client and their strategy. I like to ask a lot of questions because sometimes we'll have a consolidation strategy where we're gonna float the market down and consolidate them once values go up. If we're doing the second mortgage, maybe it's because we have a property we're gonna be selling, and then we can just pay that separate loan down and off
Okay.
um, separately, um, because it's all circumstantial and it all depends on the borrower and what's going
Yeah.
on in their life. I've had certain situations where they're selling their company and they're expecting to have a big cash infusion and whatever the timing is on that. And maybe if we take a 350 second mortgage, they expect to have that paid off in 6 to 9 months. And then instead of taking out a huge loan and paying it down with no recasted payment, we can split it up so that we can pay off the second mortgage, get them out of the higher interest rate, and then they can just focus on the lower balance. So
Okay.
that's
There's a
why
lot
you
of moving
really got
parts,
to
right?
talk to somebody who knows what they're doing and cares about your scenario and will hear you.
Yeah. I think that's, as I was talking about someone the other day, what was I? Oh, somebody asked me, is it a good time to sell, or should I wait for mortgage rates to adjust? And I said, right now, if I'm selling a house, let's do it now. Or if I'm thinking about selling, because there's just not a lot of inventory out there, so like a lot of less competition. There's so many different, and that the point I'm getting to this is what I were educating them was there's so many different loans and variances and stuff like that that people just kind of think that was like too, okay, well, there's interest rates at 7% and that's it.
It doesn't
Yeah,
work like that. I mean, if you need to sell your house, let's sell your house with like the option to contribute towards a 2-1 buy down. You offer 3%.
yeah,
You can get some payment relief built into your buyer's new payment for a little while. There's so many options and ways that you can market the property. If you need to sell, don't put your life on hold. I feel like we've been beating the drum on this for months and months. Don't put your life on hold. There are ways to help you move on with your life no matter where the market's at. And
right.
again, it's not timing the market, whether you're buying or selling. It's time in the market so that you can move on with your life, get situated, do what you need to do. And then now, if you're buying another house, you know, if you're going to be there for 3 to 5 years, you want to buy now too to
Hmm.
lock in your price
Hmm.
so that when rates go down, you're able to refinance and lock in those lower rates, but also lock in your price now so you can get the appreciation once they go up.
Yeah, I mean, that's another great option, which we didn't talk about yesterday. So true, right? You're going to go in and wait and like, okay, well, yeah, rates came down, but my price has gone up. And so, but that's now I go and try to buy a house that's a little bit less, but I might have what I was talking to with the client yesterday was they were downsizing. So we sold here, but the main time is that they keep waiting that the smaller house is going to be the same size, same price as their larger house that they sold
Yeah, it's a seesaw.
to sell. So that's a
Yeah.
great question. So really think about that again. I know that we really want to concentrate on jumbo and conventional loans, but again, so many different programs that are out there. Really take a moment and reach out to Sean or is said to. We would love for since we're putting out this information. Yes, we want you to use us. Just there's that we'll talk about the elephant in the room. That's why we put this out there. Hopefully, we can become a trusted resource, not only with me with the residential real estate side, but also with Sean on the mortgages that are out there. And again, him being a bank, if you may um, there are many, many different options. And again, it's not like I'm going down to the store and every single box of cereals, Cheerios. That's when you go down the store, you have multiple different types of stuff. What's be the best cereal for you? And that's what by using Sean and again and being in multiple states, that's the benefit that you typically don't get with a typical mortgage officer. Nothing wrong with them. I'm just saying is you typically don't get that. So that's why we hope. So if you're thinking about selling, talk to Sean. What's the best option for me? If you're thinking about buying, obviously talk to Sean. What's the best option for me? And getting that information and putting it out there not only helps me out a lot, but it's going to help out you a lot as well.
Absolutely.
So,
Yeah, I've been doing this for nearly 20 years. I started in 2005 at Wells Fargo, and one of the things I've noticed recently is how short my NMLS number is compared to a lot of my competitors. Um, so that's something to be said for that too. Work with somebody who's got a ton of experience, being creative, has a great reputation. Get a referral from somebody that you know, like, and trust, and proof is in the pudding.
so how do we find you, brother? What are some ways that we can follow you, find you, look at some educational videos?
Yeah, actually, my TikTok's blown up. Sean LaRue Home Loans on TikTok. Very active on Instagram and Facebook and YouTube.
Okay.
But always feel free to give me a call direct, 760-835-5663. You can call me or text me. I love doing these videos with my
Mm-hmm.
clients too.
Mm-hmm.
Zoom. Let's leverage, it doesn't matter where you're at. Let's pick a time, 30 minutes, 45 minutes. I can be face to face with you guys, have a conversation just like this, and really go into the questions of your dreams and goals for you and your family so that we can maximize the opportunity and get to know you a little better.
Yeah. And I think what you said too, that was really great. And thank you for sharing your information on there. But I think we're starting to do that with clients, especially out of state clients that we have. We're looking down here is doing this type of stuff. I mean, yes, you can do FaceTime and do those things, but having this type of platform, be it Zoom, we use a different platform on this stuff, but um, Zoom. I'm trying to think what other one. We also do Microsoft Teams.
Teams.
The point I'm trying to make is it can be recorded, and then so you can go back to that information. Like, what did he say about that?
Yeah.
Oh
Watch it over
yeah,
and over again. There's
I
also
can see that.
accountability that I'm not trying to talk super fast.
Right.
And like, I love recording the videos and sending them out to
Yeah.
my clients because it holds me accountable and to my referral partners, but to you guys too, that, hey, as we collect information, the scenario might change, but my intent in making sure I'm taking care of you won't.
Yeah. And I also love this too, this new avenue that was really starting to explode, as you said too. Where we're talking about really some a different form of social media with Instagram and YouTube, and obviously, we're just starting to build our Twitter page. I can't call it X still. I'm always going to call it Twitter for some reason. I can't get over it. It's just so weird calling it X. The point I'm trying to make is, I think that we're starting to see a lot of this, not everybody, and then we have to become trusted individuals with you who are watching this, but the major media stations out there will give little sound bites and put you down a rabbit hole that you're like, oh my god, I can't do it. So we want to become your trusted advisors, obviously with mortgage and real estate. And so if you're looking for some real information, we hope that you turn into it. Again, Sean LaRue Home Loans, and then us with Team Armstrong. Those are the type of things that you can kind of come back. And the great thing about this information, it's super easy for you to share as well. Like, hey, I heard this. What do you think? And if you want to dig in deeper, yes, give us a call, text us, email us, and then we can really peel back the onion exactly what you want to do. And it can be specifically for you. So I'm really loving this type of media that we're putting out over the last couple of weeks. And I think it's going to be a lot more beneficial than reading news articles on newspapers or watching your typical big media. Certain parts of it's really good. I get it, but this is really coming from the source, not just from some reporter that knows absolutely nothing what they're talking about.
Yeah. And like we were talking about, every scenario is very, very unique. So we appreciate you watching the videos, but we
Yeah.
also want to hear from you and your comments. So give us a call and ask your situational questions specifically instead of continuing to scroll to see if you can find the answer that you think
Mhm.
is going to apply to you.
Perfect. All right, brother. I really appreciate it. Thank you so much for this
Yeah,
week.
buddy.
Again, we were talking about jumbo and conventional loans right there. Most of all, as we end every episode, if you haven't done so yet, please hit that subscribe button, either with Team Armstrong. Also, hit that notification bell that's on there as well. That's a big thing to it. So when we do put out new episodes, you know that. And again, also with Sean's YouTube page as well, hit that subscribe button. And don't forget to hit his notification bell. So we'll have 2 different ways to get a hold of you. So until next week, again, it sounds like we're going to be talking about doctor loans.
Yeah, we're going to be talking about doctor loans.
So put it out there. So
I love it.
About doctor loans, we're in trouble. So all you doctors, if you know somebody that is a doctor, tune in next week and we'll have this. So have a great day, man. Take care of your family, Sean. Good talking to you. And we'll see you guys next week. God